I think just simply supply and demand. I mean, if you look at mine production, that has pretty much flatlined for both gold and silver. Uh, so the supply is not increasing. And if you go back to look at a chart, go back to I think it was October, November of 2023, when the U.S. basically confiscated 300 billion of the Russian reserves. The following day is when gold took off. I mean, the bottom was made the day of the announcement that we were sequestering the Russian reserves. And what that did was it created demand from sovereign central banks, sovereign wealth funds, and sovereign treasuries. Because these countries looked at what happened and they said, hey, if they can do that to Russia, they can do that to us and not even blink. So it's a way of foreign sovereigns, quote, getting out of the system.
If I recall, back in October of 2024, Russia, the draft federal budget for the coming year, this year, 2025, included plans for their central bank to continue adding their gold reserves, but for the first time, they were looking at including silver. So what, you think we may see more silver coming into play as far as reserves?
I'm not sure that silver is going to come into play on a country by country basis from a monetary standpoint. What Russia said was they did single out or highlight silver, but they did, I think in the announcement, if you go back, you'll see that they announced that they were going to, continue buying gold, but that they were going to buy other commodities, including silver. So I think they highlighted silver, and I think that's an easy way, for them to shoot an arrow, if you will, at the West, because look, Patrick, if you and I know that there's been a deficit for the last 4 years, and this will be the 5th year in silver. If you and I know this, Russia knows this. So what did they do? They tightened down the screws. Because they've got people smarter than you and I that research this, and they fully understand that there's going to be a failure to deliver. Do they want to be the ones that go in and, buy up $5 or $10 billion worth of silver and blow up the entire Western system? No, that would be like a declaration of war. But it works, and there's some traction by them saying, we are going to buy some silver. I mean, that just creates additional demand.
It's another great point. You are correct in that they were also looking at platinum and other things there. So,
Right.
yeah, absolutely correct there. But with that, central banks, they have continued to buy gold at a eye-watering pace. I think exceeding 1,000 tons for the 3rd year in a row. And I think last year, Q4, it was 333 or somewhere around there. So it really accelerated last year in Q4. Do you continue to see this pace where central banks will start to hold gold or more gold? Because it looks like they're holding less dollars in reserves and holding more gold in reserves.
Well, what's their alternative? Why would they not continue to buy gold? They fully understand that the U.S. basically is an insolvent Ponzi scheme. So they understand that their holdings in dollars are going to decline. So they're looking at their balance sheet and saying, this part of our balance sheet is going to decline. How do we protect that? How do we hedge that? And the obvious answer, and truly the only answer from a monetary standpoint, is gold. Yeah, they could do it with silver, but how? You can't go in and buy. There's no way that sovereign wealth funds or treasuries or central banks could go in and buy $5 or $10 billion worth of silver, because it doesn't exist. That would blow the market up. So they've got to do it in gold, which is more liquid.
And I guess staying with gold, of course, we have the BRICS, and there's still that tariff that was issued out where the creation of a new BRICS currency or backing and currency to replace the US dollar will bring them a 100% tariff. How do you think this is going to pan out?
Well, first off, I mean, if we go into actual trade wars, that's a bad thing. People can say, well, some tariffs have worked in the past. I mean, I would just go back to the 1930s, and I would do that. I would look at the 1930s because we look pretty much like 1929 right now. I mean, you've got overextended real estate, you have overextended equities, you have way too much debt in the system, the leverage is way too high. So making the comparison to the 1930s, I mean, the Smoot-Hawley Tariff Act came into place when? In 1930, 1931? And yes, the real economies were already turning down, but the analogy I used, that was like throwing sand into the gearbox. It will definitely slow the real economies, and when you slow the real economies, that means less cash flow, but the amount of debt outstanding still remains. And remember, interest rates are higher now than they were 2 or 3 years ago, so the ability to refinance isn't there, because what the majority of debt that is coming to maturity has lower coupons than the current higher coupons. So, refinancing is not an option. So from my point of view, adding tariffs slows trade, it slows the real economy, and thus slows or shrinks the cash flow thrown off from the real economy that still has to service the same amount of debt that was outstanding, and some of that debt has to be refinanced or rolled over, and those are going to be rolled over at higher rates. And a lot of those, I mean, look at commercial real estate. Many of those bonds or debt that's coming due, they don't make sense to refinance. So what happens? They just go belly up and turn the property back to the lender.
I want to touch on silver again. We mentioned the tightening that already exists for gold, and you mentioning the delivery for silver coming very quickly in a few months. You see silver tightening as well, a lot more so.
Yeah, I mean, if you look at look at the COMEX numbers. The amount of open interest for March has been increasing, not decreasing. And normally, by now you would already see it starting to decrease. And we saw this back in the middle teens, late teens, where the open interest would increase, and then going, say, a week to 10 days before the final date, you would see a collapse in open interest. And we couldn't figure out for, I don't know, 2, 3, 4 years as to how that was being done. And the way it was being done was those contracts were being laid off onto EFPs, exchange for physical. And those exchange for physical contracts were based out of London. So theoretically, the deliveries were being made out of London, not out of New York. And I guess, one way to look at it was, that saved shipping the metal overseas to COMEX to deliver. But the other thing is, the EFPs you really can't see behind the scenes. So you don't really know if the metal actually got delivered or didn't get delivered, or, there were rumors at the time that the EFPs were paying off 20-25% premiums in fiat for the owner of the contract to walk away and say, now we'll take the fiat, we won't take delivery. So, that very well could have been a way to relieve some of the pressure.
I remember hearing those things too, and I was just giving it time to see how it played out, how it panned out as well. But with the tariffs, getting back to tariffs and silver, because a lot of silver is the demand is industrial demand. You think these tariffs may influence that silver price in some way?
If you add on top of the silver price 25% or whatever the number happens to be, some applications that There are some applications right now that basically the price of silver, uh, it's as high as it can go. I mean, if you add another 10, 25, 50, whatever the number is percent as far as the tariff goes, then it makes the application, it makes it not work. And the price of whatever that product is has got to be raised. And, then you've got the question of, will that product still be used? Will they try to find an alternative to that product? The problem with silver is there's not an alternative to silver in so many of these different uses, whether it be solar, medicinal, technological. Silver's the best conductor there is. So there's not a replacement for it. So if the price of silver goes higher, what do?